Welcome to Access to Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
This broadcast actually goes out Monday through Thursday. And we open it up to the mass public on the weekend. So I hope everybody is having a great week. So let's talk about the markets. Crazy, crazy week, right? If you look at the scoreboard, pretty much flat, right? If you look at the scoreboard, pretty much flat. The S&P was basically flat. We'll talk about the S&P in a second. The Dow, fractional gain, and the NASDAQ lost about 5-6 tenths of a percent. That would be actually even more aggressive. Or, as I almost just did, a Freudian slip. We'll get to that in a second. So, crazy, crazy week, right? You had the Fed in the middle of the week, blah, 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 blah. All indications there's going to be more rate hikes. You had the start of earnings season with the big one, Netflix representing the beta names. And you have something now that we are uncharted waters, right? Uncharted waters. If you're a new trader, you're kind of in uncharted waters right now. And what I mean by that is Friday was the first time, right? Actually, the second time that the S&P cash closed below the 200-day moving average. Now, what does that mean? So if you started trading within the last year or even started trading in the last 2 years, all you've seen is the natural organic aggression of a generational bull market. And again, that didn't start with Donald Trump getting into office. That started 100 gazillion years ago, right? You can pull up a chart on the 100-year view of all the indexes, all the Dows, blah, 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 and you'll see just a big linear line. So the prospect of the economy, and this is going back to even the potential Armageddon of the mortgage mess, everything got engulfed, right? Everything got engulfed. 9/11, the Asian crisis, terrorism, like everything, the mortgage mess, everything got engulfed. And we are literally stone's throw away from all-time highs, right? So everybody believes in the bullish case going forward. I believe so, okay? But what the market has taught us in the last probably about 5 or 6 years, that the individual stock, right? The individual sentiment is much more important what the scoreboard said. And if you look at the scoreboard this week, completely flat, right? Completely flat. But this week was one of the most, let me say that last week, very, very aggressive. Last week was incredibly just good, just a really, really good week. They were just literally selling out the baby with the bathwater. And last Friday, if you go back to last Friday, and here's it right here. Here was the first close, right? Here was the first close of the S&P 500 below the 200-day moving average, which represents the mother of all support, right? Everybody, I think even the most novice trader will recognize that. So technical damage was there, right? Technical damage was there. So everything led us to believe we are going to follow through with that technical damage, right? Follow through that technical damage and really start retesting lows from the previous week. And there's something I say all the time, and it's charts don't lie, right? Charts don't lie. I think if you're a new trader right now and you are looking for this messiah, the holy grail of trading, you really don't need to look any further than what's in front of you. Technical analysis works, okay? It's like that show with Regis Philbin. You guys remember that? There's a lifeline, call a friend. You don't need to call a friend. You don't need to have a lifeline. This is technical analysis, and I don't care if you're trading the PS60, whether you're trading options, futures, whatever you're trading, okay, it all starts with technical analysis. These channels, these candles are telling you the story or potentially how the story will end. You already know how the story began, right? We already know how the story began. There was that double top we started talking about 3 weeks ago, right? The double top that everybody said, yeah, whatever, no big deal. Okay, it's no big deal until it becomes a big deal. And again, if you ignore all the signs, you will be trapped, right? You will be trapped with inventory that you don't want at levels that you don't really want, and be in a position of prey, okay? And literally being in a position of prey instead of Alpha Hunter. And that's what a lot of investors, a lot of traders were really exposed to. And as soon as we started closing below the 50-day moving average, again, because the stocks go from supply to supply and they go from demand to demand to demand and to demand. So a lot of traders got really caught off guard. But I think Friday's session really showed you, again, the confirmation that stocks will do what they have to do, despite technical damage, despite the theory that technical analysis is real, and you should trust that 99.9% of the time, the 1% of the time will kind of throw you a curveball. And that's what happened on Monday's session, right? First close, again, Friday, first close under the 200-day moving average, and then we had this dead cat bounce of 500 points, right? We had this 500-point bounce, and yeah, okay, it was fine. Nobody was prepared for it. Nobody was long. Again, raise your hand. And again, don't tell me you were long, okay? Don't tell me you were long on Friday's close. If you were long on Thursday, on Wednesday, on Tuesday, on Monday, that's fine. But there is no way, okay, and you could try to explain it to me like I'm a 2-year-old, there is no way any rational human being would get long that Friday on the first close of under the 200-day moving average, okay? So you could tell these stories to your friends, to people on social media, but no reasonable trader, okay, no reasonable trader that's been doing this for more than 30 seconds would ever get long on a Friday afternoon, first close underneath the 200-day moving average, okay? The first time we've seen this in a year, okay? And logically, obviously what happened on Monday, logically, because the new math, 1 + 1 = 7, logically we gapped up, right? We gapped up and we started going higher. And the most novice thing, and again, unfortunately, majority of you guys, the only reference point you have to other traders is on social media. It's just the reality. You know, a lot of times the only exposure that you're going to have is some random avatar, you know, giving you their opinion. Okay, it's just that's what it is. It's just a fact. Fortunately, again, I was so fortunate in starting in 1998, 1999 to be in a group of traders sitting there every single day, a camaraderie, a brotherhood, right? We built a lot of relationship, and it was that human element. So unfortunately, the only thing you have, majority of all the traders have, is what you're seeing on social media. And what I saw on Monday was the most novice thing, the most arrogant thing I've seen in a very long time. Arrogant novice traders are going out on social media and say, well, the so-called professionals are saying the market's going to go lower. Ha, 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 the bears never learn. Again, that's a statement no professional trader would ever say, okay? And that type of thinking, right? That type of thinking, that type of ability to kind of deflect the facts that are in front of you, okay, are going to put yourself in a position of weakness and not strength. And again, you might not be wrong then, but you're going to be wrong, okay? You're going to be wrong. And unfortunately, most traders, they want to be right? They want to be social media celebrities. They want to have a following. They want to have the ability to stand out like a sore thumb. But the reality of this business, the reality of this trading is I don't care if I'm wrong, okay? Again, I said this even last week. I can be wrong 99% of the time, literally, right? Literally, I could be wrong 99% of my time, okay, on my ability to collect data, okay, and form an opinion. As long as I'm not wrong financially, I'm okay with that. And Monday, we had this big rally, and the question was for Tuesday's session, okay, was, well, this inside day, was this an inside day of the buying on Monday? Or was the buying on Monday an inside scenario of the selling that we saw recently? And we really got our answer on Thursday, right? We really got our answer on Thursday's session. And the most amazing part within that run, right? If you guys remember that within that run, that big juice, right? If you guys remember at Monday's session, there was a lot of value on the downside, even though the market gapped up like 300 points and started, you know, kind of going flattish. The most ironic part about Monday's session, if you guys remember, the biggest move in equity prices came in the last 40 minutes of the day, right? So it wasn't like a gradual melt up the whole day. It was literally the last, and if you guys remember, majority of the day, you had NVIDIA coming in. You had Amazon going from up 30 to being like up 8, right? To being up 8, and then it really took off in the last like 40 minutes of the day. So the buyer strike was still very obvious. Again, this is not coming from, this is not coming from Monday morning quarterback. We've traded this, okay? Every single trader is going through this. These are facts. These stocks just did not participate very, very well until the last 40 minutes of the day. And once you started seeing Thursday's session come around, we really got our answer. Now, Monday I did well despite the big melt up, but we still started seeing a lot of value to the downside, especially in the opening ranges. Tuesday I did okay. Wednesday I did okay. Thursday I lost money. Okay, Thursday I lost money. And what happened on Thursday's session was I ran into two reload buyers, two reload sellers off top of the ranges. And the one thing, if you've been watching any of these videos for a very, very long time, I've been in the live webinar, I can control my trading, I can control my emotions, I can control my ability to navigate the markets. The one thing you will never control, I don't care how impressive of a trader you think you are, or how sophisticated, how long you've been trading, how much experience you have, you will never, absolutely never, ever, 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 did I mention ever, get rid of a reload buyer or get rid of a reload seller. So if you're buying stock off the top of a channel that's going to confirm, and David Einhorn is sitting there with 1 million shares of your stock for sale, you're going to lose. And it happened to me twice, right? It happened to me twice on Thursday's session, and I just ran into a reload seller at the top of the channels, and I kind of knew right away, once I'm running into reload sellers on 2 consecutive trades, there's something wrong. So I kind of overstayed my welcome. You have 2 choices. Either see how it plays out, right? See how it plays out, see if they can clean up the seller and watch the stock go higher, or you can get out, break even, or you can just take a loss. And I decided on both of those trades for the first 2 trades of the day, because I was doing so well, I said, you know what, let me see how this plays out. Let me see if they could clean up the seller, and they never did. And I took 2 consecutive losses, first 2 trades of the day. So my Thursday session was really, really skewed, and I knew right away, because everything was trading in such a tight range, I was trading a 3-7 offsuit. You could see it. I was being dealt a 3-7 offsuit, and I was playing one-on-one against Phil Hellmuth. It's not going to work out well for me. And I got really kind of tortured on Thursday. It wasn't the point of losing money in my first 2 trades. Okay, it wasn't that was the case that got me upset. It got me upset of the theory of, it's like Murphy's Law, anything that will go wrong will go wrong. Okay, and I say this all the time. I don't care how good of a trader you are, how talented you are. You will eventually catch a buzzsaw. Okay, you will eventually catch one of these days that no matter what you do, you're going to be wrong. Okay, you're going to be wrong. It's just the reality of trading. There's nothing you can do. It's just the universe and the market guides really tell you how much we ain't shit, right? We ain't shit. To pardon my French, but that's the case. And it'll humble you. It'll really, really humble you very, very quickly if you start feeling yourself. If you start sipping your own Kool-Aid. And the really big FU for me on Thursday's session was I shorted Google, right? I shorted Google on, I think it was the 11-13 breakdown, right? I think it was 11-13 breakdown. And it went down to like 11-10, right? Well, it was down like $3, and it just couldn't rally. It couldn't rally. It couldn't rally. And all I kept on saying was, you know what, I'm going to give it a 5-point risk. And the reason why the 5-point risk, the top of the previous candle, right? The top of the previous channel was, I think, 5 points away. So again, you want to trade things technically, not emotionally. And what happened was the stock started going lower, and it was about to break down. There was a buyer who came in with out of the money, pretty decent sized bet, out of the money calls, right? Came in with out of the money calls on Google. And of course, what happens? They start rallying the stock, right? So now I'm down like 3 and change in the position. But the stock is really not going anywhere, right? It's just not really going anywhere. But then the futures start upticking. So I said, you know what? Let me just use the previous 5-minute high as my out. Okay, let me use the previous high as my out. And if I get stopped out, again, what's my max loss? 3.5 points on Google. It's not here nor there. So it's not even the money aspect, right? It wasn't even the money aspect of the trade. I was more like, okay, well, here was the initial burst after the calls were bought. Let me use this max pain as my out. So if I originally just used the 5-point stop, right? Originally used the 5-point stop, I would have been in the trade. But I figured, well, there's a catalyst now. There's option buying, there's call buying, deep out of the money calls. The futures are turning up. Let me save myself some money, right? Lo and behold, that was the high. I get out of the trade, right? Get out of the trade, lose 3.5 points. It's not the point of the money. It's 3.5 points on Google. It's not the biggest deal in the world. And then I watched the stock go down about 18 points in the next 5 minutes. Right? Murphy's Law, baby. Whatever will go wrong will go wrong. It's just, if anything can go wrong, will go wrong. And that was my reality. That was my reality on Thursday. And instead of pushing, instead of pressing, instead of revenge trading, a professional trader, when you're doing this for a very, very long time, you already know it's part of the business, okay? It's part of the business. There's nothing you can do to avoid these type of days. I never learn anything from the days I make money. We're supposed to make money. We have a process. We've been doing the same thing. We're not deviating day after day after day. So there's nothing I did differently on Thursday that I did on Wednesday, that Tuesday, that I did Monday. I just caught a string of bad hands. And the most important part, the only difference between an aspiring trader and a person who's been doing this for a very, very long time is screen time. I've already went through this 10,000 times. I know how it ends. I know how the movie ends. Again, I referenced Scarface the last week. Okay, Tony doesn't go and retire in the Bahamas. He dies, right? He dies. So if you think you are going to be spared from having a day that you can't get out of your own way, you're sadly mistaken. Okay, you're really sadly mistaken. And Thursday was my day. So instead of kind of, really looking back at it and being upset, I took it for what it is. It's the cost of doing business. The next day, short memory. Again, we're all trying to be Mariano Rivera, right? Short memory, you can blow a save, but the next day is a new day. And Friday came and it was a clean slate. So the 3-7 offsuit that we were forced to play on Thursday's session, we got aces on Friday. Okay, we got aces on Friday. And Friday turned out to be one of the most aggressive days that I can recall probably in the last month or so. And that says a lot because the volatility has been so really, really aggressive. And we started just seeing pivot after pivot after pivot. Not talking about $1, $2. These things were going down. And for all you guys who do follow me on social media, again, I put these things in pretty much real time. Pretty much real time. And the moral of the story is, the pivot is real. I don't know how somebody else trades these pivots. The way I do it is completely different than anybody else. Again, it's an arbitrage I found 5.5 years ago, and it's been working incredibly, incredibly well. And if you trade beta and you just can't get out of your way, or you just can't get that next jolt of your trading career to get you to that, I don't want to call it the next level, but at least putting yourself in a position to succeed, this really could be this could be your edge. And we just started seeing this one after another after another. And again, it doesn't need to start out on the downside. Again, everything we do, we put out as part of the morning strategy. And again, for all you guys who are getting this email, click down below. Okay, click down below. And you'll hear all my thought process and you'll see morning strategy. And before we started talking about morning strategy, here was the day. This is the day right here. And I said pre-market when the futures were up, I think 100 points. Okay, I said I will be stunned, absolutely stunned if we don't go red today. Okay, let's see how this played out. But I will be absolutely stunned. And again, based on technical analysis. It wasn't an opinion. My opinion doesn't count for anything. I'm an idiot just like everybody else. It's all about price action. It's all about collecting data. And it's all about technical analysis. So we started putting these things one by one, like literally one by one, into the channel. PayPal, again, 84 needs to build to spike for cash flow. And again, why was it 84, right? Why was it 84? If you look at the 60-minute channel, right? Look at the 60-minute channel. It wasn't the top of this channel, right? The top of this channel was 84.84, which is the after hours high. But if you notice, right here, 83.80, 83.70, right? So we knew it needed to confirm and reclaim that 84 area to go higher. And for those of you guys who did take it, good job. It broke 84 and went all the way up to 86 on the same candle. Very, very aggressive move. And then they just started going one by one, one by one. ISRG, I took it as a short. And if I thought Amazon traded crazy, this thing is this is the Barry Bonds, right, of steroid freakish shows out there. So I short ISRG, and I knew ISRG was going to trade like crap. But I shorted ISRG, and ISRG is one of these stocks. If it's really, really good, it's going to be up like 50, 60 points. And I noticed it was only up like 13, 14 points pre-market, and the sentiment already in my mind was sour. So I knew there's a shot if this thing went red in the day. It was, at least it was going to give you a trade. And I said, watch green to red. And ISRG, it was a crazy stock, but ISRG, I shorted it And this was the candle. This was the candle green to red. It went down as much as like 17 or so. It was a pretty good trade. I didn't have any size in it. Just trades way, way too thin. But, you know, it is what it is, right? It is what it is. Again, unfortunately, the one thing we can't control is liquidity. And this is one of those trades that, you know, I did okay with. But again, I wish it traded more liquid. But again, it is what it is. It's all about game plan and control. The next thing we talked about was NVIDIA. I really, really liked the NVIDIA short. The previous day, and I joked around this, I tweeted this, the last couple of times Goldman Sachs made positive comments about a couple of beta names, we saw the most aggressive sell-offs that day in beta. If you guys remember 2 weeks ago, Goldman Sachs upgraded Alibaba, right, to a strong buy, blah, 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 like 85 points out of the money with their upgrade, and Alibaba got manslaughtered, absolutely manslaughtered. And the video was up pre-market. You can see the time here. It was 9 o'clock in the morning Eastern time. For you aggressive traders, watch the green to red, right? Green to red. But again, this was the pivot. It wasn't green to red. That was just the momentum catalyst. If it confirms 237, it should blow. I mean, it should really, really blow. And if you look at NVIDIA, guys, it just got absolutely manhandled. I mean, really, really manhandled. It went green to red, and once it took out that 237 level that we talked about, it went down another 10 from that, you know, from that level. So big, big trade. Congratulations for you guys who caught that as well. And then it just kept on going. It really, really kept on going. Here was Tesla. Here was my big trade of the day. Here was Tesla, right? And I tweeted this out. Here was supply, right? So here was supply, and you can see the supply. And this is, you know, and this is the daily look. And I said, the 10-day moving average represents, for me, at least for me, the birth of the trade, okay, both on the long side and the short side. So if the 10-day moving average gets confirmed, right, if that gets confirmed, in my mind, I think it will start an aggressive cycle in that direction. And I tweeted this out, and I said, look, you know, if this daily 10-day line gets confirmed, it's a problem. Okay, it's a problem for the bulls. Again, you can turn around and say, well, you're an idiot. But I am an idiot. We know that. But again, technical analysis doesn't care I'm an idiot. Technical analysis just confirms or denies. And again, if you are arrogant to believe that you are smarter than price action, you're not going to be doing this for a living. Again, that's the reality. That's not your reality. That's the reality of everybody else. So price action pays. Our opinions mean absolutely nothing. And, you know, that's what happened. You know, here, that's what happened. Here's the tweet. We put this in our live webinar. We put this in our private feed, and you know the 10-day support is 261.50s. Any build, especially close under that, is super bearish. Something to watch, especially if you're option players. So I got short. I cheated a little bit off the candle. Off the 62 level. All right, I cheated a little bit off the 62 level. And this thing just got destroyed. I mean, absolutely destroyed. Went down to, I even joked around. As you can see here, I even joked around. I go, if this gets to 255, 256, everybody's getting kissed in the mouth. I mean, this thing just got absolutely annihilated. And that was the end of it. This is definitely my biggest trade of the day. And here's a trade I didn't take because I went down to lunch. But I put this on Twitter because, again, I want to show everybody, especially new traders, how important it is to see these things play out live, okay? To play out live. And we see this in the live webinar all the time to see how aggressive it is. So I didn't take this trade right here, okay? I didn't take this trade. I want to show you this here, right here, okay? Okay, so here it is right here. Okay, so here is the candle we talked about. So this is around lunchtime, right? And I tweeted this out, and you can see where I took the picture, and this is where the stock was, right? And I said, Amazon, the 179, 180 level is a huge, okay, absolutely huge monster line in the sand. And unfortunately, I didn't take this trade. I went to lunch. If it builds below, it can flush, okay, the 79, 80 level. And I'm talking about within 5 minutes. I mean, within 5 minutes on Amazon. Again, here's the level right here, right? 178.80, 179, and this thing put up a $20 candle 5 to 7 minutes later. Just an absolute aggressive move. And by the time Friday rolled around, I was so mentally exhausted. Okay. I was so mentally exhausted. Again, we talk about this all the time. We put so much effort and so much mental equity into trading that we're burnt out. Okay. I don't care how much money you made, how much money you lost. We've burnt that mental equity. We don't get that back. So by the time Friday afternoon came around, like around 1:30, 2 o'clock, I had blurry vision. I couldn't even look at the screens anymore. I was getting a migraine. And 7:30, literally 7:30 at night, I went to sleep. I just couldn't take it anymore. I went to sleep and I woke up this morning like at 8 o'clock in the morning. So I got literally 12 hours of sleep. And it took me a while to kind of regain my composure, regain my focus. But again, just trading is the ultimate battlegrounds between you and yourself. And I say this all the time. I said this in the room. You don't need to be on a bad streak to take the day off to be a better friend to yourself. Okay. A lot of times I'll take a mental rest day just by not trading. Okay. You need that recharge. You need that refresher. Again, do what you got to do to be a better friend to yourself. Go to the movies, go to the gym, go swimming, get a massage. Be a better friend to yourself. Again, guys, we can't burn out. Okay, that's the most important part. I've known so many traders throughout the years, talented guys, and they burn out. And they burn out because they take everything personally. They believe that every single trade is the end all be all. And the reality is most of the trades we put on are just trades that we put on. Again, you don't need to go for that 9-run home run every single time. You'll get it, right? You'll get it. The more screen time you'll get, the more times you'll realize the movie ends exactly the same way. Eventually, you'll put yourself in a position to really understand how the market structure works. But until you get to that point, you really have to be conscious and really be a better friend to yourself. So going into this week, again, look, you can fight it all you want. I mean, and again, if I'm going to be right, I'm going to be right. If I'm going to be wrong, I'm going to be wrong. At least have an opinion, right? We closed below the 200-day, okay? We closed below the 200-day. You saw, I mean, if you pay attention to the options market, you saw some of the bets, especially in the ETFs that were taking Friday, deep out of the money puts for January, December, for January. So again, are we going to get the Santa Claus rally, right? The January effect, right? We don't know. Until we get the confirmation for price action, we can't possibly predict. We're not Miss Cleo. We're not in the prediction business. We're not in the pray business. We don't smoke hopium, right? We're in control of our trading. We trade very nice and calm. And the most important thing is, again, we practice religiously the idea that price action and technical analysis will be right. So let's go into let me give you guys some ideas. For Monday's session. Again, I'm sell biased. You know, I'm sell biased. And again, can we have a rally on Monday? Okay, God bless. We can have a value. I think the value is all on the sell side. Okay, and I'm going chart after chart after chart after chart, and it's all breakdowns. It's all potential technical damage breakdowns. There is nothing that I'm watching. There's absolutely nothing I'm watching in the market that's telling me I have to buy stocks. There's zero. And again, I could be wrong. I'm okay with that. Okay, I could be wrong. Like right now, I'm flat over the weekend. Okay, if I'm wrong and we start gapping up and we go gap and go, okay, I'll find something to buy. But again, the value, okay, the tier 1 value that I'm going into is to the downside. Okay, it's to the downside. And if you guys, for all you guys in the live webinar, everything that I said was on Monday during morning strategy as we're gapping up 150 points. All I said was there is nothing out there that's telling me we're going to go up. Nothing. We completely reversed course, and we had this incredibly aggressive session on Friday. So going into Monday, I feel exactly the same way. Okay, I feel exactly the same way. My game plan is to be very simple. Anything that gaps up, if we do have a gap up, green to red shorts or opening range lows, keep it very simplistic. Okay, keep it very simplistic. You don't need to think sometimes. Sometimes the easiest game plans are based on the ability that your eyes are right. Okay, when they're selling and you see more selling, the stocks can go higher. That means we're going to continue more selling. So let's get some ideas that we could look for on the macro level. Again, look at the IWM. Macro-wise, this was the first one to crack, right? This one was the first one to crack and lost its 50-day moving average, lost the 200-day moving average, going lower. Again, are we going to retest these lows of 51.80? It's very possible. You know, very possible. Two ways to play the IWM, either green to red, again, for aggressive traders, or short and build below the 152.74 level for a possible move to test this 151.80s. Look at the SPYs. The line in the sand is already drawn for us, right, guys? It's already there for us to use as construction levels to play off of. If they test the 275 level and they hold, yeah, you can get long. Sure, you can absolutely get long. But again, I'm giving the benefit of the doubt to the bear case. And if it starts building below this 275, I mean, look at the lows here. The recent lows are 270s for all your option players. Again, you might want to consider the 270 puts if we start building aggressively below the 275s. Again, look at, and I just posted this on Twitter a little while ago. Look at the chart on, look at the chart in the video, right? And this is after Goldman Sachs conviction buy list, right? This is in the video, right? And look what happened in the video on Friday. Just got absolutely murdered. Now, if you look at some of the stocks in this group, like look at Maxim, right? Maxim, again, Maxim is not as aggressive as in the video, but you kind of get the point, right? Look at the bottom of the channel. If it takes out the bottom of the channel, it'll go lower. Again, there are 3 dozen, right? 3 dozen charts like this, right? ILMN falling apart here. If it starts confirming this candle right here and starts losing this 313 level, right? 313 level, 313, 312 level. I mean, look how much room you have to the downside to the next support of 302. You got Facebook. There's a million charts like this, right? A million charts that you can take advantage of. It's all about what you trade, how comfortable you are with these trades, and where is your value? Where's your tier value? Again, you can see Facebook. Again, if it starts building below the 153, it has room to 149, right? Again, it's just you have to trust your eyeballs. You have to trust the ability that you are on the right side of sentiment, and that's where that's where I am looking to take advantage of. Look at Baidu, right? Look at Baidu. And again, there's a lot of charts like this that look exactly the same. Baidu, if it starts losing, there's a sneaky area here at 190. But if it confirms the 189, yeah, look at the move. You have room all the way down to 183. So there's a lot of bias, right? There's a lot of bias attached, guys. You'll see on the nightly email a slew of really aggressive put bets, especially on the indexes. So again, formulate your opinion. Again, my job is to collect data. My job is to put myself in a situation that I will take advantage of the uneducated trader. And again, it's all about believing in process, which we fully stand behind. And it's all about reading the tape, and it's all about collecting data. And that's where I feel that I've been really, really strong for the number of years. So guys, have an awesome, awesome weekend. Again, we start again bright and early at 9 o'clock. For all you guys who are attending the live webinar, please get there at 9 o'clock. Depending how the future's up, we'll have our game plan specifically tiered to what we see in front of us. Guys, God bless, and I'll see you all on Monday. Take care, guys.